Today I will discuss about 5 stocks which are providing value investing opportunities for the long term. Be sure to watch all the way through to get my full analysis on each of these companies. I will go over the key numbers and more. The first stock on my list is Tata Steel. Tata Steel is a diversified steel producer engaged in the business of steel making, including raw material and finishing operations. Right now, Tata Steel is trading at 1084 rupees with a 52-week low of 596 rupees and a 52-week high of 1534 rupees. If we take a look at their one-year price chart, we can see that Tata Steel has performed good over the last year, providing a return of more than 80%. Tata Steel is a large cap company with a market cap of 1.32 lakh CR. They have a PE ratio of 4.18 versus industry PE of 6.36, and they have earnings per share of 261 rupees, and they pay a good dividend of 2.3% and a price to book value of 1.45. And when it comes to profitability, right now Tata Steel has an operating profit margin of 27.4% and return on equity of 10.8%, and their return on capital employed is 12.6%. And if you take a look at their shareholding pattern of Tata Steel, promoters held a 33.92% stake in the company, while FIs held 21.63%, DIS 18.11%, and public 26.51%. In the recent quarter, Tata Steel's total revenue has increased by 55.93% year-on-year to 61,254 CR, and net profit has increased by 661% year-on-year to 11,918 CR. And the company has a debt of 78,163 CR, and their debt to equity ratio is 0.85 with a free cash flow of 37,793 CR. And as far as what analysts say, the current median price target is 1,776 rupees and a high price target of 2,298 rupees, which is an expected return of 1,011% from the current price level. An expected revenue growth of 47.60% for next year, which is more than the last 3 year CAGR revenue growth of 4.45% only. And the company has a low probability of default in the next 12 months. So yeah, Tata Steel is providing a very good opportunity to invest in for the long term, and right now it is trading below its intrinsic value, and it is not in the overbought zone as well. But alright, now let's move on to the next stock, KNR Construction Limited. KNR Constructions is an infrastructure development organization incorporated in 1995 and is engaged primarily in the construction of roads, bridges, flyovers and irrigation projects. Right now it is trading at 302 rupees with a 52-week low of 183 rupees and a 52-week high of 343 rupees. Looking at the one-year price chart, we can see that it has performed quite well over the last year, providing a return of more than 60%. KNR Construction is a small cap company with a market cap of 8,494 CR. They have a PE ratio of 21.5 versus industry PE of 38, and they have earnings per share of 14 rupees, and they pay a dividend of 0.08% and a price to book value of 3.94. And when it comes to profitability, right now they have an operating profit margin of 23.1% and return on equity of 23.2%, and their return on capital employed is 22.2%. And if you take a look at their shareholding pattern, promoters held a 51.48% stake, while FIs held 4.55%, DIS 34.05% and public 9.93%. And the company has a debt of 1,350 CR, and their debt to equity ratio is 0.63 with a free cash flow of negative 170 CR. And over the last 5 years, revenue growth has averaged 20.25% versus industry average of 3.44%. And over the last 5 years, their net income has also averaged 35.42% versus industry average of negative 295%. And according to analysts, the current median price target is 335 rupees and a high price target of 367 rupees, which is an expected return of 21% from the current price level. An expected revenue growth of 22.56% for the next year, which is more than the last 3 year CAGR revenue growth of 12.77%. And the company has a low probability of default in the next 12 months. So yeah, KNR Construction looking very promising to me, and it could be a great pick as their revenue and profits keep growing every year. And now let's move on to the third stock, and this is Antony Waste Handling Cell Private Limited. Antony Waste Handling Cell Private Limited is a provider of solid waste collection services, and it is one of the top 5 players in the Indian municipal waste management industry with a track record of more than 20 years. Right now it is trading at 321 rupees with a 52-week low of 241 rupees and a 52-week high of 455 rupees. Antony Waste is a small cap company with a market cap of 909 CR. They have a PE ratio of 15.1 versus industry P of 26.4, and they have earnings per share of 21.3 rupees, and they don't pay any dividend right now, and a price to book value of 2.38. And when it comes to profitability, they have an operating profit margin of 24.7% and return on equity of 15.8%, and their return on capital employed is 21.3%. And if you take a look at their shareholding pattern, promoters held a 46.23% stake in the company, while FIs held 11.27%, DIS 7.83%, and public 34.68%. In the recent quarter, their total revenue has increased by 32.53% year-on-year to 158 CR, and net profit has increased by 45.72% year-on-year to 18 CR. And the company has a debt of 140 CR, and their debt to equity ratio is 0.37 with a free cash flow of 93 CR. And over the last 5 years, revenue growth has averaged 18.25% versus industry average of 2.43%. And over the last 5 years, their net income has also averaged 24.58% versus industry average of negative 48.2%. And according to analysts, the current median price target is 473 rupees and a high price target of 505 rupees, which is an expected return of 57% from the current price level. An expected revenue growth of 58.22% for next year, which is more than the last 3 years CAGR revenue growth of 18.25%. And the company has low probability of default in the next 12 months, and right now it is trading below its intrinsic value and it is not in the overbought zone. But alright, now let's move on to the next stock, and this is Angel One Limited. Angel One is an Indian stockbroker firm established in 1996 and is a diversified financial services company and is primarily engaged in the business of stock, commodity and currency broking. Right now, Angel One is trading at 1,406 rupees with a 52-week low of 286 rupees and a 52-week high of 1,689 rupees. If you take a look at their 1-year price chart, we can see that Angel One has performed very good over the last year, providing a return of more than 300% to its investors. Angel One is a small cap company with a market cap of 11,641 CR. They have a PE ratio of 22.3 versus industry PE of 26.5, and they have earnings per share of 63 rupees, and they pay a dividend of 1.27% and a price to book value of 8.92. And when it comes to profitability, Angel One has an operating profit margin of 37.2% and return on equity of 34.6%, and their return on capital employed is 26.8%. And looking at their shareholding pattern, promoters held a 43.68% stake, while FIs held 5.44%, DIS 8.57%, and public 42.31%. In the recent quarter, their total revenue has increased by 92% year-on-year to 607 CR, and net profit has increased by 125% year-on-year to 164 CR. And the company has a debt of 1,206 CR, and their debt to equity ratio is 0.92 with a negative free cash flow of 958 CR. And over the last 5 years, revenue growth has averaged 25.97% versus industry average of 5.13%. And over the last 5 years, their net income has also averaged 96% versus industry average of 32%. And according to analysts, the current median price target is 1,782 rupees and a high price target of 1,830 rupees, which is an expected return of 30% from the current price level. And the company has a low probability of default in the next 12 months. And that being said, Angel One looks very promising to me with its growing revenue and profits every year. It has the potential for high growth in the future. And now let's move on to the last stock, Axis Bank. Axis Bank is the third largest private sector bank in India. Right now, Axis Bank is trading at 764 rupees with a 52-week low of 626 rupees and a 52-week high of 866 rupees. Axis Bank is a large cap company with a market cap of 2.34 lakh CR. They have a PE ratio of 18.6 versus industry PE of 16.3, and they have earnings per share of 41.2 rupees, and they don't pay any dividend right now, and a price to book value of 2.26. And when it comes to profitability, Axis Bank has an operating profit margin of almost 50% and a return on equity of 7.58%, and their return on capital employed is 4.84%. And if you take a look at their shareholding pattern, promoters held a 9.71% stake, which is very low, while FIs held 47.44%, DIS 30.21%, and public 12.64%. In the recent quarter, Axis Bank total revenue has increased by 16.32% year-on-year to 22,091 CR, and net profit has increased by 199% year-on-year to 3,947 CR. And the company has a huge debt of 8.5 lakh CR, and their debt to equity ratio is 8.3 with a free cash flow of 11,708 CR. And according to analysts, the current median price target is 996 rupees and a high price target of 1,233 rupees, which is an expected return of 61% from the current price level, and expected higher revenue growth of 11.42% for next year, which is more than the last 3 years CAGR revenue growth. And the company has a low probability of default in the next 12 months. So yeah, Axis Bank is providing a very good opportunity to invest in for the long term, and right now it is trading below its intrinsic value and it is not in the overbought zone as well. Alright, so that is all for now, and I hope you guys got some good information out of it. And please remember, before investing in any stocks, you need to do your own due diligence. It's very important that you do your own research first and then take a decision. And if you enjoyed this video, then please remember to leave a like on it. It really helps up my channel and I really appreciate it. Thank you all so much for watching, and I hope to see you all again in my next video. Have a good day.